The gold standard, resurgent. How BRICS is redefining global wealth. I'm Real Bester for The Real Shift. And all that I always ask you to do is roll with me. So, as we get into this, the death of paper. If you think the petrodollar is just conspiracy theory, you haven't been watching the vaults. Since 1971, the world has lived on a trust-based system, paper backed by promises, but as we move forward towards 2026, those promises are expiring. While most people are distracted by the daily noise of the stock market, the BRICS nations are quietly building a financial iron curtain made of physical gold and digital code. Today, we aren't just talking about the de-dollarization. We are talking about the resurgence of the gold standard. Let's break down the power moves that are redefining global wealth and what it means for your financial future. The physical power moves, reclaiming the vaults. The first move towards this new reality isn't digital, it's heavy. You might have seen the headlines. India recently moved over 100 tons of gold from UK back to its own domestic vaults. Why? Because in a world of shifting sanctions, the rule is simple. If you don't hold it, you don't own it. Russia has already set the template by pegging the ruble to gold. They've created a commodity-backed fortress that Western sanctions simply cannot crack. Now look at the Shanghai Gold Exchange. For decades, London and New York set the price of gold. Not anymore. Shanghai is now setting a true East price, decoupling the metal from the whims of the Western paper trading. This is the foundation the BRICS are building, a massive physical reserve to back what comes next. The digital revolution, the gold token, and Enbridge. But physical gold is difficult to move across borders. That's where the digital gold token comes in. This is how the actual mechanics of the new system. BRICS is moving towards the new unit of account. Think of it as hard money 2.0. It's a blockchain-based token where a significant percentage of every unit, rumored to be around 40%, is directly backed by those gold reserves we just discussed. Now, look at the Enbridge project. This is the new rail system. It's a platform involving China, the UAE, and Saudi Arabia that allows central banks to settle multi-billion-dollar oil contracts instantly using tokens. No US dollar, no SWIFT, and most importantly, for the BRICS, no Western oversight. When Saudi Arabia trades oil for a gold-backed token with China, the petrodollar doesn't just lose market shares, it becomes obsolete. The consequences, the inflation export returns. For years, the United States has exported its inflation by making the rest of the world hold dollars. But if the world moves to a gold-backed digital basket, that inflation comes back home. JP Morgan has already warned that losing just 10% of reserve status could spike U.S. inflation significantly. This isn't just about Eastern power. It's about the end of cheap debt for the West. We are entering a world of commodity realism where things that have weight, like gold and oil, matter more than the paper that used to represent them. Section 5, the conclusion and the big question. We are watching the rules of the global hierarchy be rewritten in real time. The gold standard isn't a relic, of the past, it's a blueprint for the 2026 economic shift. So I have a question for you. If you had to store your life savings for the next decade, would you trust a US digital dollar or a BRICS gold backed token? Drop, drop your take in the comments. I'll be down there reading them. Like this video if the analysis hits home, and subscribe if you want to stay ahead of the shift. I'm Ro for the real shift. And once again, all I ask you to do for me is roll with me. Thank you.
Good morning. China and the rest of the BRICS countries are clearly up to something big, and our analysts are trying to get a handle on just what. Consider this chart here. The SHFE is the Shanghai Futures Exchange, and we see that in the fourth quarter of 2024, last year, there was an explosion in gold futures trading. For some reason, millions of people began trading with each other using Shanghai gold futures. Why the sudden interest for buyers and sellers here in China and across the world to use gold futures on the Shanghai exchange? Maybe it's speculation by investors, hedging of long or short positions, but Chinese regulators don't allow short positions anyway, usually, longer than overnight, and that's only for their own trading desks. It's not for speculators then probably, and likely not retail investors. So what is this line going straight up? This is another. Central banks are buying gold in record volumes, 80 tons per month at $8.5 billion, led by China and a bunch of others we can't even identify for sure. Most of the buying is in secret, but China is the elephant here, and they're routing a lot of their global buys through Switzerland. China is already the biggest gold miner in the world, and yet China is also the biggest central bank buyer of foreign gold as well. All told, 1,000 tons per year, which is over a fourth of everything that comes out of the ground across the world. A survey of 72 central banks says that there are no gold sellers. Nobody plans to sell, and a third of them will increase their gold buying this year. The National Bank of Kazakhstan was a net seller of gold. Now they're buying. Just one example. There's Kazakhstan right under China at 130 tons a year of production. Instead of selling that gold to buyers abroad and collecting billions of dollars, they're keeping it instead. That's another good question to ask. Why Kazakhstan flipped the switch from net seller to net buyer, even at record high gold prices. Kazakhstan is at least admitting publicly what some of their plans are. Most of the central bank buying is undeclared. The blue bar here is declared gold purchases by central banks compared to the black, which is estimated purchases. It's an estimate because nobody really knows the number, but analysts can watch the funds coming in and the gold moving out. But governments and central banks are not informing the traders in Western systems. This helps to explain countries like Kazakhstan who are buying instead of selling, and why countries are doing it as quietly as possible. Central banks were sellers of gold going back decades. Nobody wanted to store gold when they had better ways to borrow and lend. But Western sanctions on Russia changed the thinking about all of that, and fast. None of the central banks are selling gold anymore, and many of the ones that are buying aren't reporting it. The dollar is being used as a weapon. Reserves can be frozen or just seized, so every central banker in the world outside of our own Fed or the European Union is strongly incentivized to get their dollar reserves moved to different banks and their gold reserves moved to different vaults. That's what global market players strongly suspect now. Actual net buying by the Chinese is much larger than what their official data say. Large deposits of European gold are in London. This is a chart of Chinese buying of 400-ounce bars. Most of that is probably brought back to vaults in China, but nobody outside China can say for sure. Some of the gold has moved from vaults in the UK to vaults in Switzerland. Again, we know that gold that is bought by China's central bank is leaving the UK and going to Switzerland, but the Swiss don't report separately the gold buys by central banks. So this is all an educated guess too. But here is the biggest question mark of all. China's domestic mining production, which is the biggest in the world, plus China's recycling, plus all this foreign central bank buying. As huge as those volumes are, it's not enough to explain all the new demand. There is a big hole, the difference between demand and supply. There is a lot of gold demand, and it's rising, which we see reflected in the gold prices, but nobody knows where it's going. The guys at GoldFix have a thesis which is very compelling. They put the pieces together and believe that the BRICS countries are setting up a financial system based on a gold standard. Gold is being used as collateral right now, and China is leading the expansion of this whole system. Key to that is an international gold custody network. Vaults in China, Saudi, Southeast Asia, and Africa will serve as the plumbing for a new settlement system. Gold will be used as the underlying collateral instead of U.S. Treasury bonds and U.S. dollars. In the SWIFT system today, it's dollars that serve as the pools of liquidity to make global trade happen. But a growing number of countries no longer view the dollar or U.S. Treasury bonds as safe investments, and most certainly not if they can be seized or frozen by Western regulators. They need instead a new form of collateral that is free of politics, cannot be printed or inflated away, and recognized by everyone as a store of value. Gold has always enjoyed those features, but there are big problems. How to verify that the other party has gold? That's the trust issue. It also takes a long time to move gold. The SGEI in Shanghai is already set up to solve all those problems. China's currency is the renminbi, or yuan, and in this system, renminbi will be the medium of exchange, backed by gold. Buyers and sellers in the new system don't have to use renminbi in their trades, and they'll probably choose not to in bilateral trades that don't involve China, but they can do so if they want. So China is solving the trust and verification problem here by opening vaults in friendly countries across the world. In Saudi, the appeal for China and Saudi Arabia is that oil trades can be quickly settled outside the US dollar. In Southeast Asia, central banks there can pledge their gold for renminbi credit lines for their purchases of manufactured goods from mainland China. In Africa and the Middle East, their gold can be used to finance new infrastructure. And this is an important wrinkle. Respective BRICS countries put some of their gold in vaults of other countries. Your gold is here, my gold is there. You can go to your bank and count my gold, and I can do the same for your gold here. That helps explain what's happening in Singapore. We think vaults in Singapore are being used to custody gold deposits from China, India, Indonesia, and Gulf states. China, India, and Indonesia are BRICS countries, and the question is why they will park their gold in Singapore instead of bringing it home. And that's the answer. Singapore's banks are highly regarded and trusted. They provide auditing and verification of the ownership of the gold in their vaults. Then blockchain systems make all the transactions happen very fast, in seconds. The gold sits still, but ownership of the gold can change instantly to finance trade and instantly back again upon settlement. That feature is new, the instant convertibility from renminbi to gold or back. And it means that this gold is replacing the guarantees for global trade. It's not U.S. Treasury bonds anymore, dollars, but it's gold. And a lot of the gold moving in and out of China goes through Shanghai. And that might put this chart, the first chart, into some better perspective. If gold is being used as the collateral, mainland China buyers and sellers need to convert back and forth to renminbi, And maybe they're using short-term gold futures on the Shanghai exchange to make that part of the trading work. The implications of this, if true, are becoming obvious to everyone. And these bullet points here include Russia. And they also apply to every single other country that might be worried about running afoul of Western governments. This whole system is sanction-proof. Countries will do all the trading they want, and American and European regulators can't see any of it. This is the Tonan Ri waterfall in Hainan. Be good.